All right, so it's World Liberty Finance launch day. There's a lot of speculation that this could potentially hurt the altcoin market, just like the Trump launch did, because it extracted a lot of liquidity out of the market. You can see here, Hoem saying his thesis is simple. This is going to be a liquidity suck similar to Trump. Wizard of Soho saying that it's going to be one of the greatest multi-billion-dollar extractions coming to crypto. So is this actually true, or is this simply FUD? That's something we're going to discuss in today's video. I have a framework for the World Liberty Finance launch, which I want to run through in terms of its impact on altcoins. We'll also go through some of the shenanigans relating to the launch. At the time of uploading, this is going to be recorded right before. This is just before listing. The token will be listed pretty much just when this video is uploaded. So we'll have a little bit more details once it's live, but there's been a lot of shenanigans regarding the circulating supply, which changes the thesis a little bit. Later in this video, I'm going to talk about why that changes the projection of the potential price performance in the early days for the World Liberty token and how that could actually impact the altcoin market as well. And then to begin the show, I want to talk about my thoughts on the markets because it's been a couple of days since I gave you my broader thoughts on Bitcoin, Ethereum, what's happening with gold. We saw a massive breakout, how I think that impacts crypto markets, and then what my plan is over the next couple of months. We're also going to talk about Ghost Month and September seasonality because August and September are typically weak, and then the rest of the year is strong. Is this time going to be different? Well, let's chat about that. So as you guys can see, lots to discuss today. If you do enjoy content like this, where I give you the daily crypto alpha, make sure to subscribe to the channel, hit that post notification bell. Let's get straight into things. I think in the next video, I'm going to have a proper background once my office is built. They're actually supposed to be coming any minute, so I'm trying to sneak in this recording before they come and do construction. So let's firstly start with, firstly I want to start with a reminder that if you want regular updates, because I haven't actually uploaded on the channel in a few days because we've been busy moving houses. It's almost done now. I've been posting daily, however, in Telegram because it's just a lot easier for me to give like a daily market update. I sent a 6-minute voice message yesterday, as you can see. I've had some, just quick little walk and talks around the house where I've actually kept you guys up to date with the market. So if you don't want to be kept in the loop on days I don't upload videos or just at times I don't upload, for example, later today, once the World Liberty Finance coin actually launches, if I have more thoughts closer to the launch, I'll drop it in Telegram. So make sure you do join. It's free. Link in the description below. Come join the vault. We're almost at 10,000 subscribers. So maybe we'll get to 10,000 today. I'm considering shutting the gates at some point soon just to keep the community like small and loyal, but you still have a window to get in for now. Looking at Bitcoin, let's get into Bitcoin, Ethereum, and gold. Bitcoin has, still just been following like this downtrend. It did actually break down below the range low. So we saw a bit of an impulse this morning into the 4-hourly money noodle and also that range low level. Look, to me, and I'm just speaking completely objectively, Bitcoin price action looks a little bit cooked for now. There's a reason why I think it could actually come back and reclaim the range, a fundamental reason. But in terms of a pure PA perspective on the market, the price action does look weak for Bitcoin. And until that changes, until we start getting higher lows, so this is technically a lower low, and also making higher highs, clearing this key level, especially at the 110 to 113 zone, then it's probably just going to continue to be a downtrend for Bitcoin. So that is interesting because when you juxtapose that versus Ethereum, the Ethereum chart looks a lot better. You can see on the daily, it's grinding between a major resistance zone and the noodle. Yes, Ethereum has also lost a little bit of strength basically on the H floor. It's just been chopping, so it lost its trending environment. Now it's entered a chopping environment, but there's worse things to happen to Ethereum than chopping into a major resistance zone, consolidating into this zone, and then you have on the 3-day and on the daily chart consolidation between the noodle and the all-time high. That is not a terrible place for Ethereum to be, and Ethereum looks markedly stronger than Bitcoin. Solana also looks stronger than Bitcoin right now. Why is this happening? Well, we're in this stage of the cycle where Bitcoin's narrative has run its course for now. There could be a trigger, which I'll speak about in a minute, which could put the focus back on Bitcoin. But for now, it's clear momentum stalled, and people are looking for the next bet. They view Ethereum as the next bet, the next treasury catch-up trade. Tom Lee's the new sailor. Then people are speculating already on Solana potentially being the next treasury trade, the next catch-up. So that rotationary effect starts to come into play when Bitcoin puts in its local top, which for now, it definitely has. I don't think it's put in its cycle top, however, because I think the cycles have changed a little bit on Bitcoin. I don't think it's going to be the standard 4-year cycle. In fact, I did a tweet the other day about how the 4-year cycle is dead because this is a completely different environment. This is a different monetary environment. This is a different political environment. I don't think you can apply the 4-year cycle to the current market, especially considering the impact the halving gets halved. It gets diminished every single cycle, and people start to front run that, and the market becomes more efficient. So I'm not playing this as like a 4-year cycle. I definitely think Bitcoin could have an extended cycle where it goes through these periods of weakness, then goes through massive periods of strength, and then goes through periods of weakness. But I do think over a multi-year time frame, Bitcoin can still do extremely well. And that's where your, multi-100,000, potentially $1 million Bitcoin price targets come in. Once again, not calling for that this year or within the next couple of quarters, but I do have conviction that the monetary debasement that we are seeing and the current political and economic shift that we are seeing all does bode well for Bitcoin over the coming years. So I want to keep building my Bitcoin exposure by whatever means necessary. So we've touched on Bitcoin, we've touched on Ethereum. Now let's touch on gold, because gold had a major breakout. Now you might be thinking, Miles, why are you talking about gold? Well, you don't care about gold. Well, firstly, you should care about gold because it could have a nice place in your currency portfolio. You can't be all in US dollars. You can't be all in pounds or euros. It's good to have some additional currency exposure. And I do view gold as a currency. It's basically like holding fiat, but it does have some benefits in terms of downside protection in certain environments. But the reason I'm talking about gold is because gold actually led Bitcoin. Then Bitcoin caught up, started outperforming, and now gold is starting to outperform and getting a major breakout. I actually highlighted this a few weeks ago on the show. Gold breaking out, I think, is a good thing for Bitcoin because it potentially resets the cycle. As long as gold's running, as long as there's an environment that is positive for gold, that's also an environment that's positive for Bitcoin eventually, even though there might be periods where one lags and one leads. The other thing is, the higher the gold market cap goes, like if gold does go to $4,000 or $5,000, which it definitely could, then that actually raises the ceiling for Bitcoin. It actually gives Bitcoin more headroom to the upside. And obviously, since gold's a much larger market cap, percentage-wise, given that Bitcoin is smaller, the percentage gains would be a lot stronger if Bitcoin did get to parity with gold. So basically, the TLDR is the higher gold goes, the better for Bitcoin. And I do think if gold continues its strong leg here after breaking out, that also could trigger the next leg to the upside on Bitcoin. So although Ethereum is leading right now, and it might continue to do so for the short term, I think eventually we see a rotation back into Bitcoin, which is good because that's what the market needs for like that little reset. If you look at Bitcoin dominance right now, we're actually coming into a key level on the weekly. You can see this pocket here. It could technically come a bit lower, but it is starting to find a little bit of support and it's getting a reaction in that zone. You can also see on Benjamin Cowan's chart, he's saying that Bitcoin dominance is likely going to find a low soon. Plenty of lows for dominance in September and start going back up because there are only 3 outcomes for the price of Bitcoin, and all 3 outcomes historically tend to lead to dominance going higher. 1, Bitcoin bouncing off the 20 weekly moving average and heading higher. Bitcoin leads the market and ends up getting a bounce on Bitcoin dominance. 2, if Bitcoin does not hold and drops, then alts get rinsed and Bitcoin holds up on a relative strength basis. 3, if Bitcoin just sits at the 20-week average for all of September, then alts slowly bleed out to Bitcoin and Bitcoin dominance keeps going up. So as Cowan says, no matter the direction of BTC USD, Bitcoin dominance will likely find a low soon and start heading higher. And I hope it's scenario 1, which is actually Bitcoin leads the next leg. It gets this liquidity flow following the gold breakout and dominance goes higher, not because alts drop massively, but because Bitcoin heads to the upside in terms of price. So that is a dynamic to be watching right now. And obviously I'll continue to track that on the shows. This won't play out over the next couple of days. This is like a multi-week thing. At the end of the day, this is a weekly chart, but I'm just like setting us up in terms of, macro thinking about what could happen next in the cycle. But let's go back into micro thinking now, because it's the first day of September and we have to discuss September seasonality, because this is a period in the market that is historically a little bit choppy for the crypto markets, and World Liberty Finance, which we're going to discuss in more depth later, is certainly contributing to this. Just want to remind you guys while I'm here, the vlog giveaway winners have been picked in the description of the vlog. So I just want to remind you guys that I have actually picked the winners. If you haven't responded, make sure to reply with your wallet address. I'll be checking that A, you're subscribed, and B, the account you're applying with is actually tied to your exact username. But yeah, just thought I would be a man of my word and actually confirm that the last giveaway I did on the vlog channel, the 180 commenters were eligible for the giveaway, and I've actually picked the 3 winners to win $200. And the Blowfin winners also should have their money being sent to their accounts as we speak as well. So if you won the UID giveaway from the last video, that should be sent to your account. We always obviously want to stay true to our word here on the video with our giveaways. And every giveaway I do, I actually pay out the money. of course. But yeah, just wanted to reiterate that. All right, now let's go on to Bitcoin seasonality. So September is typically a weak period for Bitcoin. Like if you look at the average returns, it's minus 3.38%, and pretty much every other month apart from June is actually positive. So it's the weakest month in terms of historical performance. August is also pretty bad if you look at median and average performance. The last 4 Augusts have been quite bad. September had a really bad streak between 2017 and 2022, and then it started to be okay in recent times, largely off, the fact that we've had sell-offs in August. So, it's natural we get a bounce in September after a sell-off in August. Instead of me explaining this, I actually think it's much better that I read out Smiley's tweet, because he basically summarized it exactly to describe why we typically see weakness, chop, or lower volatility in this period in the market. So Smiley says, September is when the hedge funds, family offices, institutional players return to their desks after their August break. They'll be looking to offload underperformers, some offload overextended assets as well, usually causing a dip in markets, which is front run in the end of August, like we've just seen with the Bitcoin drop, materialized at the start of September. Pair that with hedging, also the fact that they'll be rebalancing those same assets for tax purposes and preparing for end-of-year Q4 rotation. You have a pretty good recipe for slow, choppy, bearish August plus September, almost every single year at this point. Hope that explains the phenomenon. I think that's a really apt explanation, and it's why, looking across the history of Bitcoin, there's only ever been one August or September that has actually been very strong since 2013, and that's 2017. Every other year, we've just had pretty lackluster, maybe it goes slightly up in some cases, but we never see huge gains on Bitcoin during September. And if you do look at Ethereum as well, it's a very similar story. We have had August be positive for Ethereum, but we've never really had a huge outlier September to the upside, whereas we have in Octobers, we have in Novembers, we have in Decembers. So just seasonality is a little bit against us right now. And also some of the ambiguity surrounding World Liquidity Finance is a little bit against us right now. And the Bitcoin trend, despite there potentially being a rotation at some point, is a little bit against us right now. We just have to accept where we are in the market in terms of trend. What is in our favor is the fact Ethereum still looks quite strong. So this is definitely playing in favor of the market and is pretty much the only thing I think that's really holding up the altcoin market, is probably the reason why alts actually don't look as bad as they could. So the major invalidation for me on Ethereum, and the major thing to watch, is this daily money noodle. We really don't want to start closing below, and right now that's sitting around $4,000. There's also a major horizontal at $4,000, which is the weekly breakout pivot point. So 4K is really the level that you don't want to lose. This is the all-time high level, but if you want me to draw it like this, the compression this year happened into that 4K level, and it had a breakout to 4,800, and obviously you have the all-time high level here. So these are the two major levels on Ethereum, basically now entering a range-bound environment. I think all is fine unless you start breaking below 4K. So there's no reason to really panic on alts, and in fact, I'm going to get into this in a second here. I think there are big opportunities on alts as long as ETH maintains above the $4,000 level. So now that we've discussed seasonality, it's probably good to go into my strategy at the moment. I said this in the Discord a few days ago, and I will stick by this. The market actually dropped after this post. I said gut feel is that we still trade around 10% lower at some point in the next few weeks, referencing Bitcoin, which we actually did. We dropped from like 111 to 107. There still could potentially be further downside to the 100K zone, and also replicating across Ethereum around the $4,000 zone. Quite clear the market has lost momentum. We've had chances to V-reverse on good news, but structurally still weak. Good news is I have an interest in adding during any continued weakness we get. Bitcoin ETH Sol will be my core bets for the next period, so 50% of portfolio. For this to reach 50%, I currently just have 30% allocated. I have some more buying to do. This is true. I actually do need to add some more Ethereum, a bit more Solana, and a bit more Bitcoin as well for me to reach my desired target for that portion of my portfolio. Obviously, all positions at this stage in the cycle come with an invalidation I'm comfortable with. So on Ethereum, it's 4K. It could also be 3,500. It just depends on the price action at the time. Of course, I'll keep you updated. And Bitcoin losing that weekly noodle, which is also sitting, I believe, if we go into the Bitcoin chart, around 100K. That would be a bit of a de-risk point for me. So you can see this weekly level has really been the level for Bitcoin to hold. We might actually come down and sweep that level. I mean, that's just what the trend suggests, right? Every single time we've done that, we've actually seen a strong reaction. So sweep into that level of reaction, sweep it to that level of reaction, potentially another sweep it to this level. We just don't want to see an adverse reaction. We want to see what we've seen in prior times, and maybe we retest and then come back up again and make higher highs. So I'm actually not worried about this. This is pretty normal price action, and any sort of dilly-dallying in this region, I think would be a good opportunity to continue to add to positions across Bitcoin, across Ethereum, across Solana, being the core bets. Like, this is where I can go in with bigger size, and then also across the lower caps as well. So I also did this post on Twitter, and I've been talking about this in my Discord recently as well. The fact that I'm using the next month, this whole, choppy, weak, weird period in the market, whatever you want to call it, to actually scoop up some higher risk plays, because on-chain volume on Solana, for example, actually hit its lowest level in 2 years, a multi-year low, which is crazy. It just shows that the trenches are completely dried up right now. Whilst they're dried up, and whilst we're seeing chop across the market in general, I think there is a asymmetrical bet to the upside here. Now, asymmetrical means the risk reward is in your favor. So if the market does end up, Ethereum makes new highs and the market ends up recovering and doing well, these things can 5 to 10x, potentially 20x if they're lower cap. Worst cases, they go to zero, but the upside is significantly higher than that. So, you could allocate 20% of your portfolio, almost be willing to lose it. If you lose it, that's the risk you take. You have to size accordingly. But if the thesis actually plays out and you get returns on these assets, it could cover like 100% of your portfolio value, effectively doing a 5x or higher. So the way I view low caps in this market right now, by low caps I'm talking about things like below 100 mil, is I'm trying to identify the sectors that maybe are slow right now, but have a high probability of being a hot narrative in the next 2 quarters, so between Q4 to Q1. Remember, I'm sizing into these with a smaller portion of my portfolio that I'm willing to lose. It's 20% of my entire crypto portfolio, including Bitcoin, Ethereum, Solana, which is 50%, and stables, which have been sitting around 50. But if I scale from 30% to 50% in those core assets, then obviously my stables will drop down to around 35% before I replenish again. So effectively, I'm exposed to the upside of the market, but I have limited downside, with these riskier bets. And I won't talk about exact coins today because I don't think it's the right video. I want to go into Liquidity Finance, but I will give you some sectors. I'm looking into, obviously, ETH and Solana betas for the more interesting on-chain stuff like AI, robotics. A lot of that stuff super beaten down. Looking for narrative plays, agents. I think this kind of stuff can do well because a lot of these coins are just completely beaten down. There's actually a lot of good stuff on chain that's looking weak. A couple of memes as well. This stuff can always come back if the market does well. I had some interesting replies in my comments because I wanted to see what coins people were bullish on. But there are some people are saying like S and Brett and stuff. They're not low caps. By low caps, I'm meaning like 100 million or less. And there are, a lot of actually quality projects at the moment which are quite low cap, which you are accepting could obviously basically go to zero. You can have invalidations, of course, for these positions, and I often do. Just the way I frame it is they could go to zero, so that helps with my position sizing. Because if you assume they're going to do a 5x but don't think of downside, it can actually lead to oversizing. So of course, have an invalidation. If you buy a low cap for 50 million market cap, you could have a rule that you're going to cut your position, at a key support cluster at 25 million market cap, but you're framing your position size, so your dollar allocation in the sense that, okay, if this did go to zero and I don't invalidate, how much would I make? I think that's a good framework to have because that's going to stop you from over allocating into low caps. And for large caps, it's a different story because you're going in with more size, but your invalidations on large caps will be stricter. Like you see Bitcoin, like it closed below the weekly noodle, like 94, 93. For me, that would be invalidation on my Bitcoin buys. But let's say I get some new entries at like 105. That's only like a 10% drawdown. So if I put in bigger size, I'm okay to risk 10%. Obviously on altcoins, the number's bigger, so you have to readjust that risk profile with lower nominal amounts, so dollar amounts that you're actually putting into the project to balance risk. So that's how I'm playing the market over the next period, looking to accumulate more of these assets. These are like core, very safe bets, but I still think Bitcoin will have another run. We'll see that gold to Bitcoin kind of catch-up play happen again. I still think Ethereum will make new highs, and if ETH's going to make new highs, then I may as well allocate some of my portfolio to the riskier assets. But this is a slow process because remember, the market could remain choppy for a little bit, but I do think we'll come out of it and eventually go higher. All right, now let's talk about the real hot topic of the day, and that's World Liquidity Finance. So World Liquidity Finance is a weird one. The price has been chopping and the spot listing at the time recording is literally just about to go live. So there's a lot of volatility here. I've definitely mentioned this in the Discord and the Telegram. Don't know if I've done a YouTube show since then, but I had a low leverage position open. I made a bit of money on that position, but I allowed it out because this volatility is just a bit too much for me to stomach in terms of holding any sort of leverage. I'll potentially look to spot trade this on a couple of conditions. The first condition is if it gets very close to the price that many funds recently invested in at around $20 billion FTV, so 20 cents. If it gets back down to that region for whatever reason, I think this would be a strong opportunity. Like the closer you go to parity with this level, I think the stronger your support is. It's kind of like, a similar level to that $4 billion level on pump. That actually ended up breaking and acting as an invalidation level, but that's kind of the similar thesis or the similar mindset I'm going into this with. Now, there's just been so much stuff that's happened over the last 24 hours, which has convoluted the thesis here. So originally, the thesis was that the float was going to be really low, like 4% or 5%. So the thesis was that the token was going to pump massively on launch. Since then, a lot of news has come out about the fact that the float is actually a lot higher, potentially closer to 20-25% because of the unlock that is happening for the alt corporation. So just to give you like a bit of drama, basically, and I don't think it's that relevant now, but it's still just to give you some context as to why the token's been so choppy. People were expecting a low float, so price was pumping massively on the anticipation that it would pump on launch. Then they put out a blog post or a Medium article, which actually shows that the float's closer to 25%, which freaked the market out because they had this allocation for the alt Sigma Corporation. As Quinton points out here, he says the circulating supply will be 24 bill instead of 5 bill. The 19 bill difference is not in actual circulation. Keep that in mind. But since the ecosystem tokens and alts Sigma are not locked through a smart contract, CoinMarketCap counts them as circulating, while in fact they are not. So in practice, it's still 5 billion and everyone uses CoinMarketCap data. The team confirmed this as well. Now, this makes a huge difference on how that looks. At $1, World Liberty Finance would have been 5 bill market cap, ranking at 38. Now it would be ranked 12 at the current circulating supply. Big difference. I don't fully understand why they don't unlock these tokens gradually. So there's still, and this will become clear probably just after launch or within 24 hours of launch, there's still a little bit of ambiguity over what the true float is. The latest data that I have on this is that the float is actually much lower than that 20% figure, but there is like liquidity that potentially could be on the market in addition to the 5%, or at least it might not visualize as the 5% on exchanges or on CoinMarketCap, CoinGecko once it launches. Once again, we'll just have to see what happens with this, but there's lots of drama around it. The other thing is that we've seen some rumors that World Liberty is using USD1 to buy World Liberty Finance, so potentially doing buybacks or some shenanigans like that. There's really a lot of variables here, to be honest, which is why it's a difficult one to trade. I'll speak about what its impact on the alt market is in a couple of minutes here, but I think the biggest variable of all is whether Trump actually supports this. Like, does Trump come out and in a speech mention World Liberty? How much do they push? Or is this kind of just released into the ether and then forgotten about? I think that's a major thing right now. If Trump actually comes out and supports this, I think that'll help price action a lot more. But looking at price right now, it's just struggling to find its footing overall. As I said before, I become interested in a long. Like, I wouldn't short this, right? The reason I'm talking longs and not shorts is because I just wouldn't short it. It's just a silly thing to short. Trump could come out, say something, price could pump. I mean, the Trump administration is behind this, so you can't really fade it. And no matter what the real float is, whether it's 5, 10, 15%, it's still low enough to have a big impact if there was buy volume coming in. So shorts could easily get squeezed, which is why I'm not even talking about it. I'm mostly thinking about longs. So what's the best risk-reward entry long that I could get? There's also a chance that some news comes out tomorrow and I actually scalp on a news trade. That is definitely a scenario that I take on World Liberty Finance. Make sure you're in the Telegram, because if I do a trade like this, I'll let you guys know in the Telegram. It's free, link in the description below. But yeah, that's basically where I sit on World Liberty Finance itself. And I do actually like this post here, which talks about a potential price action chart for World Liberty, how it like launches, has a pump, drops, finds a floor, and then rallies. I do think this actually fits the mold of what the launch is probably going to look like over the early days. Like, I definitely think we see a sell-off and then strong price action, then potentially a big sell-off down the track as some of these unlocks start to take steam. So it's going to be a tricky one to trade, but the closest one you can get to launch FDV at 0.2, I think the better risk reward, but I'll keep you updated as things evolve. Obviously, I'll be doing shows this week as well, and I'll be on with Paradise for a trading stream tomorrow morning. Now, I guess something you guys will be wondering about is how it's going to impact the altcoin market, because we have seen posts come out from Wizard of Soho about this being a big multi-billion-dollar extraction. He's expecting money to flow out of alts. Home here says this is going to be a liquidity suck similar to Trump. The thing I'll say firstly about whether it's going to be similar to Trump is that, okay, there may be a liquidity suck, and I'll get into my analysis in a second, but I don't think if there was, it would be as big as Trump. Because Trump happened on the Solana blockchain. A lot of memes were really hot at the time. The trenches were the hottest on Sol at the time. So a lot of that capital rotated from a lot of like the hottest crypto projects into Trump. And that token did very well. So I think the difference here is that this won't do as well because it's not a surprise launch. The Trump token did what, like a 50x or something ridiculous on launch. So it got a lot of attention and it garnered a lot of hype. And he announced it on his Twitter. He spoke about it in press conferences, and it got a really huge push at a time where crypto was really hot. So it makes sense that people were scrambling to get into the token to trade it. Also, the market dropping after the Trump launch, and I can actually show you what happened after January 20th. This wasn't just the Trump launch triggering this. This was like a structural event that the altcoin market went through. So you could see it wasn't the actual top. December was the top. We're looking at total 3 here. But January 20th, this level was when Trump launched. We saw a liquidity extraction and then the market bled. But we also saw similar things across the broader market as well. So if you look at Bitcoin also went through this pattern. Now, can you really make the argument that people were rotating out of Bitcoin into Trump? Well, not really. So I think you can also boil down the weakness that started on January 20th to the fact Bitcoin actually started crashing and the macro scene started to look a little bit weaker after obviously a massive run up in markets, and the S&P also went down. So yes, did Trump have an impact on the trenches? Clearly, because we saw that 10 to 20% reduction across a lot of coins, but the market is a little bit structurally different this time, and obviously World Liberty Finance is on Ethereum, so it's not as direct, and the Solana trenches just aren't as hot now, so they're not as frothed up as they were, so you probably won't see as much go out. Also, the gambling appetite in the market isn't as hot as it was then, so you probably won't see as much go out. In saying that, could it be a net extraction event? Maybe and probably, to be frank. I mean, I did a Grok analysis here just to put out a few scenarios about a bull case, a bear case, and a timeline. Its summary was, yes, World Liberty Finance TG is poised as a classic extraction event, pulling liquidity from ultra mid-hype, but risking a sector-wide hangover. I do think this is the case, but the effects might be muted enough for me not. I mean, basically what I'm saying is I wouldn't shift my whole portfolio around this. There are too many variables, as we've discussed, and it's very different from the Trump launch, which makes me not with any confidence want to like start selling positions that I've been building just in case Trump sucks liquidity and then buy back in. I think, I'm already pretty stable heavy. That's my decision based on where my portfolio sits, but any sort of weakness I would be just treating pretty similar to in the scope of my overall plan, relating to seasonality and where the market's currently at, not just the World Liberty Finance launch itself. And if I do get an opportunity on World Liberty Finance itself, I'll take that opportunity as it comes. That's what I've got for you today. Good luck if you're trading this. It's going to be a crazy day in the market. Make sure to join the Telegram. Link in the description below for daily updates. If I don't do a show, or even if I upload a show earlier, I usually do an upload here later in the day, just after US Open. So I'll be doing that today as well. See you guys in the next vid. Have a lovely rest of your day. Peace out.